Hello and welcome to Between the T's, the knowledge sharing program from Texas Bank and Trust. I'm your host, Aaron May. Have you ever wondered why solid small businesses, such as local shops, trades, or family operations, sometimes struggle despite having steady customers? It may not be related to their product or their customer service level. Often, it ends up being related to financial planning issues that catch many small business owners by surprise. Common pitfalls, such as mixing personal and business finances, poor cash flow planning that leads to surprises, or skipping proper bookkeeping, or underestimating the need for credit or long-term planning can lead to tax headaches, tight cash, damaged credit, or missed growth opportunities. So that's what we're going to talk about today. And I'm pleased to have Greg Colquitt in the studio with me today to discuss this important topic. Greg is a Senior Vice President and Lending Officer for the Business and Professional Banking Department of Texas Bank and Trust. He has extensive knowledge in working with businesses of all sizes. But before we get started, please remember that the information we discuss today is for educational and informational purposes only. So please be sure to speak with a trained professional in your area about your specific banking needs. Also, all lending products offered by Texas Bank and Trust are subject to credit approval. Greg, how are you doing today?
I'm doing well. How are you, Aaron?
Man, I'm doing great.
Good.
So let's dive into our conversation. We're going to talk about some of these red flags and some of these pitfalls that can affect small business owners, especially, those of us who we have an idea for something we want to do, or we have a skill set. I love photography. Mm-hmm. So if I wanted to open a photography studio, or, someone else wants to, be a carpenter or a painter, there's things that we have a skill set in. But my skill set isn't necessarily in accounting or bookkeeping or these other things, and I don't know what I don't know. So thinking about it from the perspective of I'm a small business owner, or I have something I want to start and I really don't know where to begin. What are some of the pitfalls that a lot of people face that I need to be on the lookout for so I don't make those same mistakes?
Sure. And I'd like to really begin about just saying thank you for having me and reaching out. And so I've been in banking or in the industry, almost 30 years.
Wow.
And I've seen and had an opportunity to visit with a lot of different businesses, some of those being startups along the way.
Yeah.
And we've seen them grow, and we've seen them develop and mature. And it's an incredible deal to watch them. It's almost like in some sense or in some parallel universe, watching your kid grow and develop and flourish. And so much like yourself, and so this certainly not asking you to transition out of what you're doing today, right? Yeah. This is hypothetical.
Yeah.
Okay, good.
Yeah, absolutely. Maybe I do want to be a photographer on the side, or,
Oh man, that'd be fun.
Yeah, that'd be fun.
So, and that'd be a nice weekend gig, right? Yeah. So business owners, they come and they have ideas, and then we'll take the photography, we'll take that approach, and so, once they find something that they have a true passion for,
right,
then they have to ask themselves, or we do ask business owners or potential business owners to understand what type of business that they'd like to build or establish.
Right.
And so when they've decided, there are two ways that you can operate a business. One, that you want to grow and develop that business.
Okay.
Or two, it's truly going to be a hobby for you, and you're not trying to grow or develop anything. There may not be any future lending needs for that business. And so it's how when they decide which approach they'd like to take, and oftentimes when the bank's involved, we want them to grow and develop that business.
Right.
When they take that approach, it comes back to how they account for that business and how they account for those records as it pertains to the business, their sales, their expenses. If they have a bookkeeper, if they have an accountant, why is it important for them to report expenses accurately and not mixing both business and personal? So when we talk about the business today, your photography business, we're going from the approach that we want to help you build value in your business so that it becomes a bankable business now and in the future. So going from that approach, then yeah, let's continue.
So let's explain a little about what you mean by making it bankable and building value. How exactly does that work? Like if I'm a sole proprietor right now, I just have my own side photography thing, wanted to maybe start getting into doing weddings or family portraitures or landscape photography, whatever, rather than if I'm trying to build this, how do I know that this has value? What do you mean by making it valuable?
So really good question. One of the ways that you can begin building value in that business would be certainly making sure that you separate that business, its income, and the expenses related to the business, separating that from your personal side.
Okay.
So that means that you set up separate accounting for that business, so that the income that you receive is clearly shown through reporting, and the expenses are clear as it relates to that business. One of the hangups that we sometimes see with small business owners is they'll let us know that, hey, I know that I have these expenses, but you know what? That's not really an expense, and so that's not anything that's normal for my business, so you can add that back to the bottom line. Ultimately, what banks look at are typically tax returns. And those tax returns show what sales might be, and they show expenses. Gotcha. And then from sales and expenses, and this is just really a high level, that bottom line, that net income, is what we use to repay debt.
Okay.
So if that bottom line or that net income is a negative value, then that would suggest there's not enough as discretionary or additional income, or income really, to pay for any automobiles or any borrowings, if it's a line of credit that they may need, or whatever it is you might need. It shows a negative, would suggest that I have no extra income to pay for that loan. Right. And so that's one of the elements a bank will look at when we're considering credit. And in addition to a person's personal credit, that's a pretty important factor. That does the business generate enough income to repay whatever that loan might be?
Good. So an idea would be, say, right now I do a lot of my photography outdoors. Like I'll do family portraits out at a lake or at a park. But one day I want to be able to have my own studio.
Sure.
And I want to be able to justify the cost of, buying new lighting, buying new flashes, upgrading my camera equipment, maybe even hiring a secretary and paying payroll to that secretary to schedule my appointments. All of this stuff are things that, if I'm a photographer, if I'm wanting to grow my business, those are the logical next steps. Mm-hmm. But if I'm not accounting things properly, like whenever someone gives me $500 for a photo shoot, and I just deposit that into my bank account as opposed to depositing that into a, photography account.
Sure.
That's part of this mixing of personal finances with business finances that can make it to where on the banking side, it doesn't look like my business is very profitable.
That's correct. And that's a really good example. And we'll take that $500 value that you mentioned. And so one of the, pitfalls that we see for those type of businesses is that for that service, you've taken pictures of a family by a lake. They decide to give you $500 in cash. Mm-hmm. And so from your personal side, you're thinking, you know what, I'm not going to report this. It's not important. They've given me cash, so that'll never hit my books.
Gotcha.
Well, ultimately, that can come back to impact you if you're trying to grow your business. You will have to just show that you received $500 in revenue.
Gotcha.
And so you might have some expenses associated with that would also be reflected there, so that we can see that you received $500. It cost you $100 to prepare and get ready for that shoot.
Right.
So your net profit there in that job is $400.
Okay.
So it's a discipline, and your willingness to be disciplined and to report that income as well as those expenses.
Okay. So how does someone rectify these sort of pitfalls? So like what type of accounts do I need? Like
Sure.
this is one of those things, like I don't know what I don't know. If I'm trying to get this business set up, what are the things that I need to make sure that I have to where I am properly reporting this? And is this something that goes to the point that I need to hire an accountant, or is this something that I can do on my own?
Sure. So the month to month, and it really just depends on your accounting acumen. If you
Right.
if you have the knowledge on keeping books and maintaining books, then that's great. You can prepare your books internally and keep those up month over month. If that's not your forte, then I'd recommend visiting with a bookkeeper or an accountant
Okay.
to help guide you in the right direction so that you are properly representing your revenue and your income and those expenses, so that in the future, as your business grows, the volume grows, and it's in size and complexity as that grows, that you continue to be a bankable business and one that's reporting their income, so and building that value, so that once you've expanded and you've picked up 2, 3, 4 more photographers
Right.
in this business,
Yeah.
then you're able to create something of value, so that at said future date it can either go to your kiddos or it's something that can be sold.
Okay. And how do I make it a business that's marketable and sellable versus just something that's, because if something happens to me, we just touched on this briefly, like, passing it on to my kiddos and stuff like that. We're going to talk more about that in a later segment.
Sure.
But when we're talking about making it a bankable, this company has value as opposed to it's just a service that I provide that I get paid for.
Oh yeah. And so every business is it's a you can look at it as it's a live specimen. It's breathing, and it and its ability to do well has to do with your ability to generate revenue.
Yeah.
And when you're generating that revenue or having those photo shoots, then you're also controlling your expenses. So the example that we mentioned earlier, perhaps you've had a photo shoot, it's down by the lake, they give you $500 and it costs you $100 for that shoot, then you had really good income off of that shoot. And
Right.
hopefully that continues, and you're reporting all of those values, the income and expenses, so that at the end of the year, there's a cumulative amount that says, you know what, we did really well this year.
Right.
We had 500,000 in sales, and it only cost me 100,000 in sales. So my net earnings at the bottom is 400,000.
Okay.
So it's building that value in year over year, and that's the profit and loss side of the business.
Right.
So without really going into the weeds, but there's the profit and loss side, and there's also the balance sheet, which is a statement in time,
Right.
of how the business is performing, the assets that it's accumulated, and so both of those exist together to show year over year how a business may progress.
Definitely.
So yeah, it's making sure that you report those items, that you control your expenses. You may want to. There's always more equipment and that you can add, but does your business generate enough income to buy new equipment?
Right.
Or before you buy equipment, should you increase sales?
Right.
To support that next purchase or that acquisition?
Definitely.
And when you're buying additional equipment, then perhaps is it better to use your cash to buy it, or is it better to go to a bank or a lending institution to borrow money to buy that?
Yeah.
So as the just very similar to raising kiddos, and so you have to look and make sure that it's the right time to grow,
Right.
and that you don't grow too fast.
Absolutely.
Along the same vein of looking at equipment, let's say that you say that, you know what, I want a piece of equipment that's going to last me the next 20 years, and it's very expensive.
Right.
Well, your business may or may not have grown to the point to support a very expensive piece of equipment.
Definitely.
So it's organic,
Absolutely.
and it takes time to grow, even though from just our personal standpoint, we want it to grow fast and overnight, and measured growth is, in most cases, better than rapid growth.
That's a good point. All right. So we're going to take a quick break. And when we come back, we're going to tap into that conversation about growth and the pitfalls of not having proper cash flow balance management, so we can determine what we need to do to protect ourselves from making mistakes with our cash flow that can limit our ability to grow. We'll be right back.
Hello, I'm James Sheridan with the TBT Financial Minute. Your credit report can play a significant role in your financial health. It's essential to periodically monitor your credit report for any errors. The 3 major credit reporting agencies are required to provide a free copy of your credit report once every 12 months. Log on to annualcreditreport.com to review yours today. TBT Financial Minute is brought to you by Texas Bank & Trust.
You've been an anchor for our families, a shelter in the storm, a refuge from uncertainty, and the one to keep us warm. You remind us of where we can go and just how far we've come. You've caught our tears and helped us sing our songs. You've welcomed our friends and embraced the ones we love. You've always been the first to say hello when we make it back to that place we call home. Wherever life takes you, the journey home starts here. TBT Mortgage.
Member FDIC, Equal Housing Lender. All TBT lending products subject to credit approval.
All right, we are back with Greg Colquitt, Senior Vice President and Lending Officer in the Business and Professional Banking Department with Texas Bank & Trust. We are continuing our conversation about ways to help small businesses prepare for the unexpected and to think about some of the pitfalls that others have faced and how to avoid them. This segment, we're going to talk a little bit about cash flow planning and how that can actually be a silent killer for businesses, because sometimes we may not be measuring everything that we spend our money on or keeping track accurately of everything that we're bringing in. And it can create a crisis when we don't have the income coming in during a slow time of the year that can make some of those expenses that were easy before hard to pay now, and put us in a bind to where we either have to limit things or we have to find a way to bring in new money in a crunch, or potentially face shutting down our business, which we don't want to do. So Greg, let's talk a little bit about some of the cash flow planning mistakes that small businesses can make. For instance, if I'm a photographer and, I've had a great first quarter and I've been getting money coming in, I've been able to expand and hire a secretary, and now I'm looking to do some more things, but our bookings haven't been coming in as solid as they were in that first quarter. Now I'm facing a position where I still have to pay this person that I brought on staff as my secretary. I still have to pay for this equipment that I just bought, but the income is starting to wane during this period. What did I do wrong? Did I not plan properly? What can I do to prepare myself so that something like this doesn't happen again?
Yeah, so it sounds like you've made some investment, or you reinvested in that photography business to assist in its growth, right? And It sounds like you did, in fact, have some organic growth. And it's not uncommon that after you've experienced some level of organic growth, which could include the additional additional staff. It could be the purchase of equipment. And then once you've made those steps, there's a settling that takes place.
Yeah.
But one thing that I'll mention kind of isn't really something that businesses or new businesses in particular should consider is that there's a cyclical nature to each business.
Right.
And so when we talk about the cyclical nature of each business, you'll notice that perhaps in your industry, business is booming in the fall and winter, which may lead into Christmas photos.
Right.
And it may take a small dip after Christmas.
Yeah.
So your sales begin to decrease. And then it begins to pick up perhaps in the spring.
Okay.
Where there are perhaps more family photos, graduations, and things like that.
Yeah.
And then it takes another dip in the summertime.
Right.
So each business that in this type of industry in particular would have some level of a cyclical nature.
Yeah.
And so we'd hope that over the course of the past 2, 3, 4 years, as you've grown this business, that you've identified that cyclical nature of the business.
So it sounds like that might be where I'm failing then, because I'm now facing a period where the income in the bank account doesn't match the expenses that are going out. So it sounds like I didn't have that type of plan in place.
Well, when you say failing, let's use a different term.
Okay.
You're making an adjustment, right?
Okay.
So you're a small business owner and you have the ability, you have the flexibility to make some adjustments.
Okay.
So perhaps instead of buying lunch every day for staff, you make an adjustment there, you make a tweak.
Gotcha.
With the understanding that, hey, we know that this is going to pick up.
Okay.
And so if you've expanded the business, then you know what switches you can turn on and turn off, perhaps to help generate some sales for you and help you grow. And sometimes, quite frankly, when there's small businesses and they experience this type of growth, which could also, like I said, be a growing pain, then they may have to dig into their pocket and to put some money into the business as it goes through that cycle and it comes out of that cycle.
Would it also be a good idea if I had some cash reserves on hand? Because I think that's one of the things that I feel is struggling in this scenario that I'm playing out here. If I'm trying to make it through this slow time, I know that yes, spring is coming, Valentine's photos, Christmas, graduation photos, those things are coming. But during this slow time, it feels like I don't have enough money set aside for these slow times. What are some things that I should be planning for when it comes to setting aside costs during those slow times to make sure I don't run into this sort of crisis?
Yeah, certainly. So ideally, the cash reserve would be perfect.
Okay.
But sometimes businesses may not have that cash reserve available.
Okay.
And so that's where a bank would be able to potentially assist them in that little short window with a line of credit or something to help them just get over that hump and until their busy season then arrives again, at which point they can pay the line off.
So explain a line of credit to me. If I'm a small business owner and I'm in this moment where I still need to pay my secretary, she's still making bookings for me, but it's just not enough to cover until this busy season picks back up. A line of credit allows me to do what exactly in this situation? Sure.
So one thing to keep in mind is that when you look at banks for established businesses, then really banks are historic lenders. So, and when I say that, I say a historic lender from the aspect of the first thing we're going to say is we'll need a couple of years of tax returns, right?
Yeah.
So that's looking at the past to help make a determination and have a better understanding of what the future may hold.
Okay.
Based over a 12-month time period.
Gotcha.
So that's where it's important to make sure that you're reporting that revenue.
Yeah.
And it's important to make sure that those expenses are reported and categorized appropriately. And it's important to see that the business is profitable and has the capacity to take on debt, which would be the line of credit, right?
Yeah.
And now moving on to the credit line side of it, typically a line of credit it's a short-term solution. It's not a long-term solution, so that you draw on the line of credit or you utilize that line of credit and always have a balance. That's not really what they're meant for.
Okay.
They're meant for short-term needs, is the one that you've mentioned here, right? So you've taken on equipment, you've taken on additional staff, and you just need a little of assistance until you reach that point that business increases, and then you will be fine.
Right.
So what's important when you utilize those credit lines, and what banks look for healthy lines of credit, is to show that they utilize those funds for a short window and they paid the funds off.
Yeah. I think that's very important. And we talk about that often on this program, about the importance of making sure that if we do take out loans, that we actually have a plan in place to not just make the minimum payments, but also to have that loan itemized out to where we can pay it off in a reasonable amount of time.
Sure. And ultimately, you want to be able to retire from a business owner. You want to be able to retire that debt as quickly as possible. And that increases the availability for banks to utilize those funds through other lines and have it available to other businesses as well.
Absolutely. So what other services does a bank offer to a small business, either in the situation we've been workshopping with a photography business or other businesses as well? So maybe I need to, replace some equipment or something like that, and I'm in this same type of boat. What other types of services can a small business owner come to a community bank and sit down and talk with a lender about?
Sure. And there's so many services that are available. And so typically, when a small business owner thinks about the bank, they really just think of the loan side.
Right.
But there is the cash management side, which is the transfer of funds, its ability to take funds and electronically move those across their industry,
right?
Which could include wires, electronic transfer, or ACH.
Yeah.
Similar to those other services such as Venmo and some of the other providers that are out there that you can electronically transfer the funds without paper items. Cash management, managing the flow of cash, how much they have, what's available, how they use that cash is those are all things that community banks are good about visiting with customers. And we're, quite frankly, we do really well in assisting those customers with the needs that they may have to help either streamline their services within their business, create some efficiencies within their business, and help them better manage their staff and reduce or eliminate the need for perhaps taking on additional folks for manual functions.
Yeah. Okay. So we're going to take another break. And when we come back from this break, we're going to talk about just some how-tos and some best practices for people who are trying to figure out that next step. If I need to hire a bookkeeper, an accountant, what are some things that I should be looking for in those type of relationships? And then also thinking about the years ahead. Do I want to work until I decide not to, or do I want this business to be something that I can grow to a point where I can sell it, or something that I can pass on to my children someday? Have I thought about all of that? We're going to come back and we'll talk about that a little bit more.
Hello, I'm Karen Partee with the TBT Financial Minute. From job loss to medical expenses, life is full of the unexpected. Be prepared with an emergency cash fund. Save up enough money to cover 3 to 6 months of household expenses and put it in an accessible savings or money market account. Should a crisis occur, you'll be prepared. Learn more at texasbankandtrust.com. TBT Financial Minute is brought to you by Texas Bank and Trust.
Member FDIC, Equal Housing Lender.
All right, we're back once again with Greg Colquitt, Senior Vice President and Lending Officer in the Business and Professional Banking Department of Texas Bank and Trust. We're continuing our conversation about preparing for small business, how to make sure we avoid some of the pitfalls that small businesses can face. And now we're about to go into a segment on what do I need to do, what questions do I need to ask when I am looking for a good bookkeeper and planning for the future. Some of the things that we don't necessarily think about when times are good or when things are easy. But then whenever we run into a snag, all of a sudden we wish that they were on hand. So Greg, let's talk a little bit about if I'm my photography business, I'm trying to get up off the ground. I'm trying to make sure that I have my money organized properly to where I'm not going to run into major cash flow problems. And I know that I have my bank who can look at my records if I do need help. How do I make sure that I have a good bookkeeper or an accountant or someone that can help me on the other side of it, make sure that things are prepared and get my accounts in the right order?
Yeah, sure. That really good question. And so, and that's $1 million question for a lot of businesses.
Yeah.
Where do I begin with my bookkeeper? And so oftentimes we notice that there are tax preparers and not accountants, that business owners or small business owners assume that there are accountants, but they're not able to go and have communication throughout the year on perhaps some changes and things that they can do. Yeah. Because it's a tax preparation service. I would recommend for businesses to identify a true accountant. Okay. And then from that accountant, perhaps say that, hey, we have some, and some of those accountants actually provide bookkeeping services as well. Okay. And if your accountant doesn't provide a bookkeeping service, perhaps asking them or even asking your banker for perhaps a list of recommendations of bookkeepers that they're aware of. Right. Word of mouth. You'll visit with other people that are in your industry, or you'll know other photographers. Right. And say that, hey, well, who do you use? Yeah. And who are some folks? Talking to other business owners within the community. And we'll all have to do our research, right? There's Google, there are Google reviews, there's Yelp, for instance. There's a lot of resources that are out there that we utilize to help say that, you know what, they're 4.5 stars. Right. I should reach out to them and give them a call. Yeah. And so when you visit with those type of folks, you want to make sure that they're folks that you can communicate with, folks that are responsive, folks that are knowledgeable, and folks that you can perform some due diligence and make sure that there's some history or there's some referrals that you're aware of folks that have had good experiences in like or similar businesses. Right. So there are some accountants that do very well in specific industries. It might be assisted living. It might be manufacturing. It just really depends on your business and which accountant you decide to go with. Right.
So if I wanted to sit down with someone, I know you said finding someone who's got good reviews on review platforms and stuff like that, but there's something to be said about that personal relationship side as well. Like, is this someone that I can actually trust? Like, I feel like I can look them in the eye and I can talk to them and connect with them on a personal level as well, right?
Oh, most definitely. So there's some level of vetting that takes place before your conversation or going to visit with them, and just checking to make sure that they're either within your industry, that those review or those platforms that are available would support pretty good reviews for the services that they provide. So yeah, most definitely.
So one of the things that I wanted to talk about when it comes to establishing this relationship with a bookkeeper is, you know, if I feel like, well, my business is so small, I don't need one, or I don't feel like this is something I want to make sure I set aside the money for. What are some of the hiccups that people may run into when they don't have a bookkeeper? Like,
Sure. And so ultimately you want to either have the knowledge or use the expertise of a bookkeeper.
Right.
And so everyone files taxes and I don't know of a small business that doesn't file taxes at the end of the year.
Right.
And at the end of the year, as income comes in and they want to make sure that they're accounting for their taxing burden at the end of the year. And so they'll want to have that discussion with the bookkeeper is along the lines of how do I prepare for that taxing burden that I may hit based on my income that I have.
Right.
And so they'll be able to give an opinion about how they can structure their income or the cash that they receive on hand so that they make sure that doesn't cause a burden or crunch or anything when it's time to file your taxes.
Right. And that can happen especially for sole proprietors or, small businesses where you don't have employees, or maybe you have one employee and now you have to factor in, what amount comes out of that person's check for taxes. What portion do I, as the business owner, have to set aside for their taxes? And then I take the income and all of the things that I have to pay taxes on as a business owner. These are things that if you don't have this knowledge, it can definitely put you in a world of hurt as you try and Google search your way out of a mess, as opposed to having someone who knows the knowledge who can actually help you prepare for that.
Definitely. That's a really good point.
Okay, so now I want to ask one more question.
Sure.
We talked a little bit about building value into a business and how to show that a business is profitable. But what if, something happens to me or something happens where I decide, I'm ready to retire from this. I have 7 employees. I've grown my photography business to where now I'm like the go-to family portrait photographer, and I've created my own studio and have 7 different photographers who work underneath me. I have a few office staff who do the graphic design and the editing on the backside and all of this stuff. And it's basically become a self-sustaining business, but it's all under me as the owner. Mm-hmm. If I'm in the position where I'm ready to retire, or I'm ready to do something else, or I want to have this set aside and growing to where I can pass this on to my children someday. What are some things that business owners need to be thinking about before we get to that point where it's like, all right, I'm ready to quit working, or something happens in my life and I can no longer work, or God forbid something happens to me and I pass away and there's not a structure set up for how I'm going to pass this business on to someone else? What are some things that people should be planning for when it comes to succession planning in their business?
Sure. And so there are several different exit strategies for business owners. And you're correct. It might be that under their succession plan that they have a child or some individual that might work within the business that they want to work on that transition.
Right.
They may decide to take the business to market. Which would, and when I say that, what I mean is to have it available for sale,
right?
Through some online platform.
Yeah.
And they may decide to shutter the business, but you haven't built it that way to shutter it, right?
Right.
So
yeah.
You want to realize some value out of that business through your retirement, and so one in preparing for that. You're trying to determine what's the value for the business,
right?
To see what can I offer this business to someone for sale.
Yeah,
and so and there are a million different ways that we've seen people come up with the value,
right?
And so, but from a bank side, we typically look at those hard assets that are there. That's the most common way we look from an asset sale, but there are valuations that can be performed on business. It's cash flow. It just really depends on what type of business it is.
Yeah.
So once they've established what that value is, then they're able to identify the next step. If it's selling it to someone within the company or,
Right.
or taking it to market.
Definitely.
But once once a business owner's established a value and perhaps identified a buyer, hopefully they're currently working with a community bank, and obviously we'd love for that bank to be Texas Bank and Trust. But once they've done that, then let's say that they are selling that business and they have what we'd refer to as a liquidity event. So an event where they're going to receive some form of cash.
Right.
And so not only can you utilize your bank and Texas Bank and Trust for that period of time that you're receiving that cash, but perhaps we can utilize one of our other divisions that you may want to mention on wealth management to consider that arm to assist with those funds and estate planning for future needs.
So that plays into that relationship that banks can have with their communities that goes beyond just transaction.
Yeah. So there again, typically when they think of the bank as a business owner, they just think of the loan side, but we're so many more things than just that lender, right? We can assist them within their business with their deposits, the transfer, the ease, the movement of funds. If it's wire transfers, sending funds electronically, setting limits within their account, designating individuals within their company, even bookkeepers and accountants on perhaps looking to assist with reconciling their accounts.
Right.
And that's as the business operates. And then as they transition out of that business, then we have those divisions within the bank through utilization of wealth management that they can assist them with their planning needs, estate planning needs. And even if they're at a point where they're buying homes, so even through the mortgage division, so there's so many different things that we can provide in terms of lending services. And so when small business owners think of the movement of cash or utilization of cash, then one of the first things we'd love for them to think of would be Texas Bank and Trust, perhaps as a starting point to say, go to your banker and see perhaps what are their recommendations, what are they seeing, so that we can work together and support and build a community.
Absolutely. So that is all the time that we have for this edition of Between the T's. I want to thank Greg Colquitt, our Senior Vice President and Lending Officer in the Business and Professional Banking Department with Texas Bank and Trust, for being on the program with us today. As we discussed before, all of the information we've talked about is for educational and informational purposes only. Please be sure to speak with a trained professional in your area about your specific needs. Between the T's is a production of TBT Studios and Texas Bank and Trust, member FDIC, equal housing lender. All lending products offered by Texas Bank and Trust are subject to credit approval. If you live within one of Texas Bank and Trust markets, we would love to be your bank, but if not, we hope this information is useful for you no matter where you live. Until next time, remember that knowledge is power when it is shared between the T's. Thanks for joining us.